Hi everyone, welcome to the SmartCharts European session. Hope you're all well. Alright, so we're getting into the higher impact news announcements of the week. Tuesday, the US Producer Price Index, the PPI Reports. This is released by the Bureau of Labor Statistics at 1:30 p.m. GMT. It measures the change in the price of finished goods and services sold by producers. It's a leading indicator of consumer inflation, as if producers charge more for goods and services, those costs are typically passed on to consumers. No changes are expected to the prior month's 0.4% figure. In this instance, we've got a lot of US news announcements coming out this week, in particular tomorrow's CPI, Consumer Price Inflation Report. So it's going to be a big week for the US dollar. We know the US dollar has been one of the biggest themes over the past several months with the strong rally. The economy is doing very well. We had the strong job support last week there as well. So we are looking for continuation in the trend of the US dollar, but mainly on the lower time frames because we're so far into the trend. But we also are keeping aware on any major levels of support and resistance those dollar pairs could get to on a medium to higher time frames, because at some point we will start to see maybe some profit taking, maybe some trend reversal price action. Okay, and so in this instance we're looking to trade it in both directions, just on different time frames, and that becomes very important when you're this far into a trend, that you've got to be able to adapt to whatever the market is doing, understand the market context. Now, of course, we don't know how the US dollar will respond to this news announcement. That's not why we look at them. We look at news announcements for risk management, because sometimes, especially if you're like a lower time frame trader, you might have a lot of trades on at one time and they might all be on the US dollar, because that's where all the flows are, right? That's where the money's flowing into. So you're going to be a bit mindful coming to a high impact news announcement that if the dollar turns the other way, you can get hit on all those trades and take a larger loss in a much more shorter, concentrated period of time, which can affect you mentally. So we've got to be careful of risk management and overexposure. Also, we look for any surprises. Okay, are there any major surprises on what the market is actually expecting? So if we started to get negative data this week, maybe that will cause the reversal in the US dollar. Okay, because everyone's so long that everyone will want to take their positions off the table, bank their profits. We can get a sharper move in the other direction. So we look for any surprises, because those big moves, sometimes they're tradable, sometimes it's a bit volatile, but if it is tradable, we want to know about it, right? Because that's our job as traders in the financial market, to look for the clues the market is presenting to us, stack lots of different clues in our favor and apply them consistently over time to get at a statistical edge. Okay, so we'll keep an eye out on that. And actually, if we look at where the currency market is right now by going to the tools tab inside the SmartCharts, we can already see the US dollar has started to weaken a little bit. So if you recall, regular viewers, we know that the US dollar has been pretty much in the green over here every day we've looked at it. Okay, but now we're starting to move into the red. It started to become a bit weaker, so we can already start to see we have a bit of a phase 2 move right now in the US dollar. So we're in that phase 2 move on the daily charts. So that's going to be quite interesting to see if we can get into areas where phase 2 can end, phase 1 cycles could begin, and we can get a continuation with the trend, or if it's going to turn into like a bigger type of reversal. Now remember, when you're looking at your currency strength index, a few different ways we use this. First of all, if you're just spending a few seconds every morning just looking at it, it just gives you a broad understanding of what's going on in the markets. If you can see the US dollar, for example, was green every day for weeks at a time, now suddenly it's red, it's already telling you the market is correcting, the US dollar is correcting, it's in a phase 2 move. So it really gives you a bit of understanding of what's going on in the market before you even looked at a chart. Okay, and that's very powerful, of course. Also, for you lower time frame, short-term, fast time frame traders, then really what you want to be doing is finding the currency pairs and trading the strong ones against the weak ones, right? You want to be buying the strong currencies and selling the weak currencies, because their currencies are paired, so that's where you're going to get the strongest trends. But for your medium to higher time frame traders, you might be looking at some of the really strong currencies, some of the really weak currencies, and saying, okay, well, it's been strong for quite some time. Are we coming into any levels like big horizontal levels where maybe I should stop trading in that direction and maybe even look for some reversals or phase 2 price action. All right, so we can use it in both different ways. And something that is quite interesting, something we highlighted yesterday, by the way, is that we had a lot of strength in some of the commodity currencies, right? Canadian dollar was leading the pack there yesterday, not because any major news announcements regarding the Canadian dollar, but we had big rally in oil prices, and Canadian dollar is heavily linked to the direction of oil prices as well. But overnight we've had just a lot of strength there in the commodity currencies. Now your commodity currencies are your Canadian dollar, Australian dollar, New Zealand dollar, and they're classed as commodity currencies because they make most of their income from the export of commodities. All right, so we're getting a bit of strength there in the commodity currencies, and we can see things like pound, Swiss, euro, dollar, yen, pretty weak right now. So we want to try to pair these things up. So if we look at the charts tab, and if we go to the daily chart 180 phase change of strategy, this is why Canadian yen seems quite interesting, okay? Because we know the commodity currencies are quite strong, Aussie, Kiwi, Canadian, and we know the yen is exhibiting a bit of weakness, okay? So it'll be interesting to see if that trend does continue, then maybe we can get some more strength here in the Canadian dollar. As this Canadian yen exchange rate goes up, the Canadian is strengthening, the yen is weakening, right? So there's a couple of things going on here. Now, first of all, the 180 phase change of strategy is one of the strategies we go through on your trader certification workshop, your 3-day Learn Forex program. And it's one strategy, so you've got many different strategies here inside of SmartCharts, which will just help to identify and trade different market conditions, okay, different types of trends, ranges, consolidations, and so on. And with a 180 phase change strategy, this one helps to identify and trade any momentum trends that are developing in the market. All right, it utilizes moving averages, the yellow line and the blue line on the chart. And moving averages simply help give us a smooth line of price direction, okay? And generally speaking, when the yellow is above the blue line, it's indicating an uptrend. Okay, so when the yellow is above the blue line, indicating an uptrend, and when the yellow is below the blue line, is indicating a downtrend. Okay, so then we go with those moving averages. Now for me, it also utilizes relative price patterns like ring highs and ring lows as well. Now for me, I like to trade when price is in the moving average zone. So your moving average zone is being on the yellow line, on the blue line, anywhere in between that is the moving average zone. Why do I like to trade in a zone? Because it just gives me a focus, okay? Because I can say, well, buyers turned up here before, sellers turned up here before in the zone, maybe they could turn up here again today, all right? So it just gives me a focus to keep an eye on, all right? Now, of course, we don't just rely on one clue, we want to look at multiple clues and stack them in our favor. So on top of what SmartCharts is actually finding, by the way, and filtering the list out for us, saving us a heck of a lot of time, so we don't have to click on everything in the list to find opportunity and analyze everything every time we turn up. So this is particularly important when you get to the intraday charts where you have limited time, okay? We're really going to help you to trade those lower time frames and medium time frames. And if you're not familiar with how SmartCharts is helping you, then of course make sure you're reviewing all your e-learning materials in the Learn section of SmartCharts. Make sure you're attending on your online classes, webinars, boot camps, workshops through your live events tab. Make sure you're attending all your coaching sessions, okay, to review your performance data in your journal to then tailor and customize your trading plans to your strengths and weaknesses. But on top of what SmartCharts is finding, we also like to look for another few things as well. So many of you know from the Trader Certification Workshop, your 3 days of Learn Forex, we go through a very simple checklist, literally where we just check 1 or 2 things. That is it, okay? And that level of focus is what helps us to find consistency in the market, because we take that level of focus and just looking at 1 or 2 things, we apply that on many different strategies, many different asset classes, many different time frames. So we do one thing well and we apply it on multiple different things, okay? And that's how we build multiple streams of income, all right? And also, because we have a high level of focus and what we want to see before we turn up, we actually take that focus and within our routines, we train and condition ourselves to build the belief and confidence in following the plans, listening to the market, and trusting ourselves through the back testing and forward testing that we go through when we build your cognitive trade journals on day 3, which is an absolute game changer. Lots of good feedback from different traders who have been incorporating that into their routines, which is absolutely fantastic. Now, for me, I like to look at additional areas of support. Okay, so for example, we can see like these low points over here. We have this angle of price where buyers have been turning up here before, so maybe they could potentially turn up here again. All right. We also have this level of resistance coming down here, which is actually broken through. So let's see if we get a bit of a retest here for buyers to turn up. So what we actually have here is we have a confluence of support areas, okay, all aligning at the same place. Now, on top of helping to identify opportunities, SmartCharts will also help the risk management side. If we click the up arrow, it will populate an entry price at the blue dot, stop loss at the red dot, target the green dot, which can all be adjusted according to your own user preferences. And it will do the percentage risk calculations, reward to risk calculations, and currency conversion calculations for you. I like to set an expiry for this particular strategy and time frame at current bar close, and then decline or accept the trade here at the bottom. And basically what this means is if buyers don't turn up and get to the entry level by the time this current daily bar closes, this pending trade will expire. Didn't win, didn't lose, didn't cost anything. But if they did decide to turn up, that would trigger into a live open trade. Then either it goes to the target level or it goes to the stop loss level. So either it's a winning trade or it's a losing trade. Okay. Now, there's plenty of other different things going on in the market, so make sure you're attending all your live trading webinars throughout today as well to help you identify and capitalize on those different opportunities. But in the meantime, that is it from me. I'm going to wish you all the best of your trading, and I'll speak to you next time. Bye for now.